Hey, what's up YouTube? Welcome to my YouTube channel. I know it's been long I posted here. I have been a little bit busy with school and trying to balance school and trading. It's not quite easy. But here I just want to give you guys some sauce, some nice trading tips or trading day that we had today. So you can see we took buys on gold today and we stacked the positions, right? So I'm going to be breaking down this particular trade for you guys. So let's dive into the video. So guys, welcome to my trading screen. So this is basically a breakdown on gold today, June 5th, and we are going to talk about the price action that happened today, right? So what I normally do is to mark our previous day's high and some previous day's lows and try to see what PD rate that falls below or above these levels, right? So right here, this was on the 4th of June and we see 3rd of June, and we see that price went up to create these highs, and on the 4th of June this low was still intact and this high was still intact, because we were thinking that we are going to purge this low here before going to the upside, but that did not happen. That did not happen. So we closed on the 4th of June to be a reversal, and as a result of this reversal we have this smart money time in change of delivery from bearish price action to bullish price action. So on this day today, we have price opened right here and price immediately took out this low and began to go to the upside. So normally I marked out my PD arrays, my fair value gap, like this fair value gap that was respected, and price used it to dump to the downside. And when we came up to this level, we watched to see reactions in this zone, right? So on our way getting to this zone, price closed above this zone, mitigating this other fair value gap, right? Mitigating that fair value gap right here. So after the mitigation of this fair value gap right here, I actually measured the range, right, using my gun box. I measured the range from this high here to this low here. So we are having like the premium and the discount. Premium price here, discount price here. So price traded to the premium and rejected down to the discount. More like price going up, down, up. You can call it ranging, right? So we've never had a clear movement to the direction where price wanted to go to, but in our mind we have our previous day high and a previous day low for our target anywhere the market wants to take price to, right? So that was where we were targeting, we were looking out for, right? So I was actually bullish throughout the day. Right? And I was looking for higher prices. I don't know why, but I just felt like the price was going to move to the upside, even when we were going from premium to discount, from discounts to premium, right? So one important thing that we should know or understand in this game is that price move with time, right? At the right time of the day, price will move, and when it moves, you should be ready to follow the movement, right? So when we had this area closed, especially this candle here, it's how would I say it disqualified this fair value gap as a fair value gap where market could turn from, right? So that initially just disqualified this as my point of interest for a sell. A point of interest for a sell. So when we came down, observing how we moved away, we moved. Look at these candles here. This first candle, second candle, and the third candle. It was straight and strong bullish candle, which actually make this a break of structure. I don't know, I've started not liking to use these terms, break of structure and the rest. For the course of this video, I just have to use it, right? So which have made this to become a break of market structure here, and then we're just waiting for price to retrace back to a level where we could find price go higher. So if we use our Fibonacci tool, when we use our Fibonacci tool, taking from this swing low, I drew it wrongly, from this swing high here, to this swing low here, we can actually divide this to be another premium and discount level, right? So below the 50% here of this Fibonacci, we have our fair value gap 1, fair value gap 2, with other juicy stuff. Like we can see this as what, another block, right? This is another block right here, and this is a fair value gap, and this also is a fair value gap. But then with the range, we're able to filter this one out, right? We filtered this one out as being our fair value gap. So when we filter this one out as being our fair value gap, we're more focused on these impulsive candles 1, 2, 3 that broke this structure, right? This is actually how I was thinking. So when price moved away, you see how these candles were forming little, showing that they had no strength to break below this fair value gap midpoint, right? And having this other block as our point of defense for price not to go below it. So we see how we wicked away from the other block, and then the body of this candle telling us that I'm not ready to go below this area, right? So price then created this impulsive move, moving away from this zone entirely, away from the other block, away from this zone. So let me just take away this fib, right? Away from the zone and away from this other block right here. And then we saw that another impulsive candle that broke this high right here, this high, has formed. Remember the time of the day. So right here, and this happened by 9 o'clock, right? Which now made this another break of structure. You can use the body to define break of structure right here. So as this is now our break of structure, we are also saying like, okay, fine, we've seen this as a break of structure, what will price possibly do? So we can erase this as our point of interest because of how bullish this candle closed inside our area, right? Inside this area. So this candle closed inside it, and the other third candle confirmed the break, right, of this area. So we can take this off. So this is no longer our point of interest. So price now came to another zone, which is this area here, where we have this fair value gap and this bearish or bullish breaker, and price immediately tapping at this zone here, rejected immediately with impulse. Where was it rejecting to? To this fair value gap, area of inefficiency, to fill up this zone before going to the upside. Okay, so I would like us to I just want us to understand what I was saying before I took my entry. So we'll go lower to in a lower time frame, right? So when price did this, okay, went to that zone, immediately by 9:30 rejected that zone, giving us the idea that okay, we are bullish in this market. So after that happened, the only place that we sought for was this area of inefficiency. I was not on the chart to take this buy. Okay, I was not on the chart to take this buy, but then I was able to take this other buy because this was the area that I was looking for price to hold, but price did not hold. So as when I saw this impulsive move to the upside. Now, one thing I want us to know is whenever price creates a fair value gap within an inverted fair value gap, it is valid and very strong area that price can move. Now, this one is not that obvious, but there was a fair value gap here. So let me show you this. Okay, ICT did not make mention of this. Look at this. This is a fair value gap right here. This is a fair value gap. You will not find this in its teaching. Seriously, this is a fair value gap. And as we had this fair value gap here, price came to it. It is a sign that price will move, okay, from this zone, and this zone has broken off, right? This particular zone is no longer in use, but has turned inverted fair value gap. Now, inside this inverted fair value gap, as a potential, let's say this wasn't there, this other candle that has formed wasn't there. So if we were looking for an entry, let's say we just saw this like this. So we saw that okay, fine, these candles were like strongly bullish and they've broken above our area of interest. So we look within that area of interest if we can find a fair value gap. You can go to any time frame, there will be a fair value gap within that area of interest. So here is the fair value gap we found, and then that was where I took my entry. Okay, I stacked my position right here. Okay, keeping my stop loss just at this week because of how impulsive we left that area. Okay, so price then went up to, I know I was late to this market, but I understood where the target was, which was the previous day's high. So price went to the previous day's high, and then we took our profit that you see earlier in the video. So this is just a breakdown of how I was able to catch gold today, and how you can also do it using this process of reading price action with ICT concepts. Don't forget, to please like, share, comment, and subscribe to my channel. Come on, man, I'm just starting and I need all the support that I can get from you guys. You can also invite other people to watch my channel. I'll be posting more free stuff like this for you guys. I won't hide anything, and I will share my piece with you and also what I have come to find out from the market with you. So all the same, stay blessed.